All right, today we're grabbing our compass and our map because we are about to chart a course right through the fast-moving, wild world of crypto trading. Think of this as your personal explorer's guide to a whole new digital continent. So right as we begin this expedition, we have to ask the big question.
I mean, that's really the heart of it, isn't it? On one hand, you've got this landscape of absolutely unprecedented opportunity. But on the other, it has this reputation for being, well, the Wild West, unpredictable and super risky. The truth is, it's kind of both, and your success really depends on knowing the map, the tools, and, yeah, the dangers. And that's exactly what we're here to chart out today.
So let's start with just how different this all is. Traditional markets, they have opening and closing bells, they're established, they're centralized. Crypto, though? It's a completely different beast. It literally never sleeps. It is a 24/7 global marketplace that's built on a decentralized and, frankly, constantly evolving foundation. Now, this isn't just some small tweak. It changes everything about how you have to approach trading.
So here's the bottom line. Navigating this frontier requires a totally new map and a new mindset. You just can't bring the old tools from other markets and expect them to work perfectly here. You've got to understand the unique terrain, the, let's call them weather patterns, and the local customs of this new world.
Okay, so let's start by actually mapping out the territory. Before you can navigate anywhere, you need to know what you're looking at, right? This section is your guide to the main landmarks on this digital continent.
And you'll see pretty quickly the crypto landscape is really diverse. Of course, you've got the giants like Bitcoin and Ethereum, but there are also these vast territories of altcoins, specialized DeFi tokens, and the super important safe havens we call stablecoins. Every slice you see here represents a different type of asset with its own unique personality.
First up, the big one, the original pioneer, Bitcoin. The best way to think of it is as the digital gold of this world. It's the largest, the most established asset, and its gravity is so strong that its price movements often pull the entire market right along with it. It is the benchmark that everybody watches.
Next up, you've got Ethereum. Now, if Bitcoin is digital gold, think of Ethereum as a bustling digital city, maybe even a global computer. Its value isn't just in the coin itself, it's in everything that's being built on top of it. We're talking decentralized apps, NFTs, you name it. The more activity there is in this city, the more valuable its real estate becomes. Makes sense, right?
Now, once you step outside those two huge cities, you enter the vast wilderness of altcoins. These are thousands of other projects, each with its own specific goal or idea. This, my friends, is the high-risk, high-reward frontier. Venturing out here requires some serious research, because while you might find a hidden gem, this territory is also famously volatile.
So, in a market known for these wild, stormy price swings, where do you find shelter? Well, that's where stablecoins come into the picture. They are your safe harbor in a volatile sea, designed to hold a steady value because they're pegged to something stable, usually the US dollar. Traders use them all the time to lock in profits or just wait out a market storm without having to leave the ecosystem. Okay, maps in hand, we know the terrain. Now we need to talk about the right gear for the expedition. You wouldn't climb Everest in sneakers, and you definitely shouldn't trade crypto without the right analytical tools.
And your analytical compass here is incredibly powerful. Because blockchains are transparent, you can analyze data directly from the network itself. That's what we call on-chain analysis. This lets you see stuff like transaction volumes or watch for huge wallet movements that might signal a big market shift. You combine that with some crypto-specific indicators and even sentiment analysis from social media, and you've got this treasure trove of data that just doesn't exist in traditional markets.
With these unique tools, traders have developed some truly specialized strategies. Take arbitrage, for example. The goal there is to exploit tiny little price differences for the same asset across hundreds of global exchanges. Then you have something called yield farming, which is kind of like earning super high interest on your crypto, but it comes with unique risks like impermanent loss or smart contract bugs. And of course, there's NFT trading, a whole new universe of speculating on digital art and collectibles, which carries its own big risks like illiquidity. Each strategy has a powerful goal, but also its own very specific dangers.
Speaking of risks, no honest map would be complete without marking the dangerous areas, right? Now, the key isn't to avoid risk entirely. That's pretty much impossible. The key is to understand it, to respect it, and to know how to navigate it safely.
So, hazard number one, and it's the one everyone talks about, volatility, the extreme price swings. Prices in crypto can jump up or crash down dramatically in incredibly short periods of time. This is really the double-edged sword of the market. It's what creates the opportunity, but it also creates massive risk if you're not ready for it.
So how do you protect yourself? Well, this is your volatility shield. It starts with something called stringent position sizing, which is just a fancy way of saying never risk more than you can truly afford to lose on any single trade. And just as critical is using dynamic stop-loss orders. Think of them as an automated safety net that gets you out if the market turns against you.
Hazard number 2 is all about the technology. See, in the world of crypto, you are essentially your own bank. That's powerful, but it also means that security is your personal responsibility, 100%. And the threats are real, from exchange hacks to really clever phishing scams trying to trick you into giving up your keys.
So here's your security shield. The absolute gold standard is using a hardware wallet. This keeps your assets completely offline in what's called cold storage. Next, and I mean this seriously, enabling two-factor authentication on every single account is completely non-negotiable. And finally, before you interact with any new protocol, just take a minute to understand the smart contract risks involved. A little bit of caution goes a very long way.
And finally, we have the third hazard, the regulatory landscape. The rules of the road are still being written, and they're different all over the world. This uncertainty is a risk factor all by itself, because new laws can pop up and impact the market, your taxes, and how exchanges operate.
Your compliance shield here is all about being diligent. You've got to stay informed on the legal requirements where you live. You need to understand the tax implications. In most places, crypto profits are subject to capital gains tax. And maybe most importantly, keep detailed records. I mean, every single transaction. It matters.
Okay, we have mapped the terrain, we've packed our tools, and we've charted the risks. So, what's next? What's over the horizon for this digital frontier?
Well, this gives us a pretty good glimpse. We're already seeing more and more big institutional players entering the space. The growth of Web3 and the metaverse is creating brand new use cases for digital assets every day. Over time, we definitely expect to see more regulatory clarity. And a really fascinating trend to watch is the tokenization of real-world assets, things like real estate or fine art, being put on the blockchain. The map is literally being redrawn in real time.
Ultimately, if there's one core lesson to take away from our entire journey today, it's this. Success in this domain relies heavily on adapting proven data-driven methodologies, ensuring that your decisions are grounded in robust analysis rather than just speculative impulse. It's about having a plan and then trading that plan.
The map is always changing, and new territories are constantly appearing over the horizon. So for a true navigator, the journey really never ends. The question then becomes, what will you be watching for? Thanks so much for joining us.